Thanks for joining us today. My name is Katie Baker. I'm the Executive Director of FAIR Idaho. FAIR stands for Food, Agriculture, Restaurants, and Establishments. We are a membership-based trade association that represents basically our local food system. So farmers, ranchers, livestock processors, food producers, beverage producers, independent restaurants, beverage establishments, and retailers. And so we came together during the pandemic and really wanted to build a more resilient food system here in Idaho, but also really help our members be successful. So some of the things that we focused on is partnering with Lorin on the employee retention tax credit and helping our members understand that tax credit, and working on health and dental insurance and healthcare needs for all of our members. There's an opportunity to work as a collective and use our collective voice to really get membership benefits for our members that will help them and their employees. We're really thinking through, how do you help our employers attract and retain staff? And then what we do is we advocate on behalf of our members. Our members come to us with their needs. It could be saving farmland. It could be legislation that affects their business. And then we work to connect Idaho producers to Idaho retailers to build a more resilient food system. And so that's a lot of our focus right now. So thanks so much for joining us. I won't talk about FAIR anymore, but I'll put my email into the chat box so you can see that. And I'll let Lorin take the floor. Thanks, Lorin.
Great. I'm going to share my screen. So I have a little PowerPoint that kind of helps folks understand. Let's see here. Okay, can you guys see that? So first, I'm just going to give an overview about what I'll be talking about. So the first thing I'm going to talk about is, what is the Employee Retention Tax Credit? Does your business qualify? Any impact of PPP? And how much can you qualify for? So first of all, what is the Employee Retention Tax Credit? So the Employee Retention Tax Credit is a refundable payroll tax credit that is equal to 50% of qualified wages an eligible employer pays to employees between it's actually March 13th of 2020 and December 31st of 2020. And then in 2021, this credit increases to 70% of qualified wages an eligible employer pays to employees between January 1st, 2021 and September 30th of 2021. The infrastructure bill included a sunset of the Employee Retention Tax Credit to September 30th. It originally was going to go through December 31st of 2021. So there are two ways to qualify for the Employee Retention Tax Credit. The first is called the gross receipts test. So that is a test where you look at your quarterly gross receipts, your quarterly gross revenues in 2019, and you compare the same quarter in 2020 and 2021 to those quarters in 2019. So 2019 is considered a base year. And if you had 50% or greater of a reduction in 2020 in any of those quarters, or that is reduced to 20% in 2021 of any quarter of the first three quarters in 2021 compared to the same quarters in 2019, you would qualify that way. The other test is called the alternative test, and that is, were there government mandates that impacted your business's ability to operate in a normal capacity? So, you know, for restaurants, bars, coffee shops, etc., brick and mortar, you know, that was a fairly easy way to substantiate, because restaurants and such had to close their doors. They couldn't serve indoors. They had to socially distance, so they couldn't serve at the capacity that they normally did. They had to pivot to outdoor dining. All of those things help them qualify. If they didn't qualify under the gross receipts test, they could qualify under this alternative test. So for farms, one of the things that we've talked about is a lot of farms sold to grocery stores, farmers markets, restaurants. And so if any of those channels that you used were impacted because of these government mandates, that constitutes qualification under the alternative test. It also includes supply chain disruptions, things like that. So it's all on a case-by-case basis, but speaking generally, those are typically ways that you can qualify under the government mandates. Did you receive any PPP? If you did receive PPP, either round 1, round 2, or both, you can still qualify for the employee retention tax credit. You just can't use the wages that you used for forgiveness for PPP towards the employee retention tax credit. So one of the things that I do is once we qualify you for specific quarters, I go through and figure out what wages were used for PPP and carve out the wages that would still be eligible for the employee retention tax credit. So I can help you maximize both of these. This is just a quick example of a calculation for 2020. So for 2020, $10,000 a quarter is the maximum qualifying wage amount. Actually, I take that back. For 2020, $10,000 is the maximum annual amount. You can only use $10,000 worth of employee wages for the entire year, and you get a 50% credit on that. So you can get up to $5,000 per eligible employee. So a qualifying employee is someone who is not a majority owner, is not a family member of a majority owner. So if you have any employees that don't fall into either of those categories and were paid W-2 wages that you reported on your form 941 or 943, that's the form that's used for farms, typically is 943, then those wages, those employees can be eligible. So this is just an example. If you had 10 employees with wages of at least $10,000 for the year in 2020, you can get up to $50,000 in credit. In 2021, that changes to 70% of eligible credit percentage, and it's per quarter for 2021. So for 2021, in any one of those 3 quarters, if you qualify based on either gross receipts or those government impacts, you can get up to $7,000 per eligible employee per quarter. So it's significantly higher in 2021 than it was in 2020. And the way that you receive these is you are monetized by requesting a direct refund using IRS form 941X, which is an amended 941 form, or a 943X for farms, which I help you prepare. So I think this says the same thing, that yes, to claim it, you file a form 941X, and it's amendment to your original 941, and there's a line to say that you would like to receive a check from the IRS. So as I'd said before, first steps to qualify, see if you meet either the gross receipts qualification criteria. And like I said, it's comparing the quarters from 2020 to the same quarters in 2019. And then the same for 2021. And then the other way, if you don't qualify that way, determine if and when the business was impacted by the governmental orders. And once we establish which quarters that you qualify for, then we would go ahead and use your payroll, do a payroll analysis to establish what those amounts would be. So here's a quick illustration of what a gross receipts review is. So let's say in Q1 of 2019, you made $100,000. In Q1 of 2020, you also made the same, so there was no reduction. So let's go to Q3 of 2019. Say you'd made $150,000 in that quarter, but you only made $70,000 in 2020. That's a 53% reduction. So you would qualify in those quarters. So you can see how we do these impacts. In Q1 of 2021, you made 70,000 compared to 100, so that's a 30% reduction. So you can see how you would qualify based on this analysis. So the key takeaways from here is that you can get the employee retention tax credit even if you received PPP. I know there's been a lot of misinformation out there that, oh, if you receive PPP, you can't. Also there's a lot saying, hey, if you didn't lose any money, you can't qualify, and that's not true. It's by the top line revenue. It's not by your bottom line net income. And so you can check those quarters. We can also look at facts and circumstances relating to the government orders that impacted your operations. And so the way that I do this is I perform a detailed payroll analysis to see what wages are eligible for the employee retention tax credit, remove any PPP funded wages and any ownership wages, and we would establish a credit for each quarter that you're eligible. Does anybody have any questions? Doesn't sound like it. As I explained to Katie, and Mackenzie knows this as well, I am offering this service for free to farmers and food processors. So if anyone needs help or has any questions, please feel free to reach out to me. You can go through Katie and she can put you in touch with me, or you can reach out to me directly. Here is my information. You can either reach me by email or by a phone call, and I'd be happy to help.
Lorin, I have a question.
Sure.
What do you hope that folks will already have put together when they do reach out to you? Like, what are some of the most important? I think you just reviewed, but just went over a lot of that, but like in summary, before folks are ready to work with you, what are the things they need to have in front of them?
Sure, good question. So typically when I send a proposal to someone, it has a checklist included on the second page of the items that I need. And that would be either quarterly or monthly financials for 2019 through Q3 of 2021. If you just have them by month, you can send me those and I will put the quarterlies together, or if you can run them by quarter, that's great. So that's the first thing that I ask for. The second thing is detailed payroll reports that show wages by check date by employee, so as detailed as possible. And then your original 941 forms and any PPP forgiveness documentation that you have, so I can see what your PPP loan was for, when it was issued, and that it was forgiven. And I can go ahead and do the calculations from there. And then if you don't qualify using the gross receipts test, it's typically a conversation that we would have where I could gain an understanding of what impacts your business received and the dates for those, so we can qualify you for those quarters. Sounds like a lot, but it's really not.
Lorin?
Yes.
Because with at least my operation, I have a farm, plus I do a tasting room. Is it possible to qualify under gross receipts and then also by the governmental impact?
Yes, you can qualify in some quarters based on those, and then it's not one or the other. You can use both of them for qualifying.
Okay.
Are there any other questions? I know this went really quickly.
I know, I've got it down now.
Yeah.
I hope I didn't talk too fast. Some people,
great.
I try and keep it as, high level as possible, just to kind of talk about what we really need and not go really too far into numbers.
Yeah, absolutely. Well, if there's no more questions, I put my contact information in the chat, the link to the Fair Idaho website. Lauren, also, if you have questions, you can either reach out to Lauren about the employee retention tax credit or just shoot me a quick email and I'll connect you with Lauren. If you have questions about Fair Idaho and our trade association and what we do, don't hesitate to reach out about that as well. So I'll give it about one more second. And also, if you have questions, don't hesitate to reach out about that too. Just send a quick email. Well, perfect.
Happy to help spread the word.
Yeah. Well, thanks, Lauren, for all you do. That's huge to have Lauren give her time to help farmers and ranchers and processors to complete these forms at no charge. That's pretty incredible. So thank you.
Happy to help.
Absolutely. Thank you so much.
Thanks, everyone. And I hope you have a great day.
All right. Thank you, Katie.
Yeah, take
Care,
care.
Mackenzie.
Bye.
Bye-bye.